Click the bell icon to get latest videos from Ekeeda.
Hello friends. When new partner is admitted into partnership firm, he brings capital. Usually capital is brought in cash. If new partner brings capital in the form of asset instead of cash, say for example, he brings equipment, then how to record this? That will be understanding in this question. Let us read question. The balance sheet of Ramakant and Shamkant, who share profits and losses in the ratio of 2:1, is as under. Balance sheet as on 31st March 2012. Asset side, leasehold property 20,000. Livestock 6,600. Loose tools 90,200. Stock 84,800. Debtors 48,000 less RDD 2,000. Net debtors 46,000. Bank balance 75,400. Current account of Shamkant 2,000. This will be recorded in partner's current account. As it is there on asset side, this current account have debit balance. So it will be recorded on debit side of current account. Capital account of Ramakant and Shamkant. This will be directly recorded in liabilities. Creditors 51,000. Rent outstanding 10,000. Reserve fund 7,200. This will be divided between Ramakant and Shamkant in the ratio of 2:1. Ramakant 4,800, Shamkant 2,400. This will be transferred to the credit of their current account. Current account of Ramakant. It is there on liability side, so it has got credit balance. Will be recorded on credit side as buy balance brought down. On 1st April 2012, Umakant was admitted as 1/4 partner on following terms. He brings equipment of 80,000 as capital. So new partner's profit share is 1/4. He brings equipment as capital. So Umakant's capital account will be credited for amount 80,000. Equipment will be recorded as an asset in new balance sheet. Firm's goodwill is valued at 1,44,000. Valued means here it is raised. Goodwill account opened. And Umakant agreed to bring his share in firm's goodwill by check. So whole firm's goodwill is calculated as 1,44,000. Umakant is admitted for 1/4 share. So multiplied by 1/4. So amount of goodwill brought by Umakant will be 36,000. Goodwill brought in cash. That is goodwill brought in check. That is bank account will be involved. Here we have bank account on asset side. Bank account will be open. To the debit of bank account will be recording value 36,000. Bank debit, goodwill credit. RDD should be maintained at 7.5% on debtors. It will have one effect, profit and loss adjustment account debit. Second effect, less from debtors. Here we need RDD 7.5%. Debtors are 48,000. 48,000 multiplied by 7.5%. it is 3600. Already we have RDD here 2000. So to the amount of 2000, we are required to add 1600. So here 1600 will be adjustment value. This will be recorded to the debit of revaluation account. That will be the another effect of 1600. Increase livestock by 2600. Livestock we are required to add amount 2600. Second effect, profit and loss adjustment account credit. Write off loose tools by 20%. Loose tools are 90,200. So less 20%, it will be 18,040. We'll have to reduce from loose tools. Second effect, profit and loss adjustment account debit. Outstanding rent paid rupees 9040 in full settlement. Outstanding rent, it is given here 10,000. It is finally settled. So here from rent, we are required to deduct full amount 10,000. In new balance sheet, there will not be any item of rent outstanding. It is settled at 9,040. Bank account credit 9,040. We have got discount on this liability. It will be credited to profit and loss adjustment account 960. Pass necessary journal entries to record the above scheme of admission. For the sake of more understanding, we'll also draw new balance sheet to show the equipment which is brought as capital by new partner. Let us start with first journal entries. On liability side, we have a reserve fund 7,200. This will be divided among old partners in their profit sharing ratio. Reserve fund account debit 7,200. To Ramakant's current account 4,800. To Sham Khan's current account 2,400. Being reserve fund distributed among old partners in old ratio. On 1st April, Umakant was admitted for 1/4 partner, that is 1/4 share in future profits on following terms. He should bring equipments of 80,000 as his capital. Equipment comes into business as capital contribution by new partner Umakant. Equipment account debit to Umakant's capital account. Equipment account debit 80,000 to Umakant's capital account 80,000. Being equipment brought by him towards capital. Firm's goodwill is valued at rupees 1,44,000. Umakant agreed to bring his share of goodwill by check. So his share we have calculated here 36,000. Umakant brings by check 36,000 towards his share of goodwill. Bank account debit 36,000 to goodwill account 36,000. Being goodwill brought by new partner by check. Goodwill account debit 36,000 to Ramakant's current account 24,000. To Sham Khan's current account 12,000. Being amount of goodwill distributed among old partners in sacrifice ratio, that is 2:1, which is same as their old ratio. RDD should be maintained at 7.5% on debtors. Debtors are 48,000. 7.5% comes to 3,600. Already we have RDD 2,000. So we are required to increase it by 1,600. Revaluation account debit 1,600 to RDD account 1,600. Being RDD increased. Increase livestock by 2,600. This will be added to the asset and credited to profit and loss adjustment account or revaluation account. Livestock account debit 2600 to revaluation account 2600, being livestock increased in value. Write off loose tools by 20%. Loose tools are 90,200. 20% is 18,040. Revaluation account debit 18,040 to loose tools account 18,040. That is being loose tools reduced or written off by 20%. Outstanding rent paid rupees 9,040 in full settlement. Actual amount of outstanding rent is 10,000. It is settled at discount. Outstanding rent account debit 10,000 to revaluation account 960. That is for discount earned. To bank account 9,040. That is for payment made. Being outstanding rent settled at discount. Pass necessary journal entries to record above scheme of admission. We have recorded all adjustments. Let us close revaluation account first. As per entry number 5, revaluation account debit to RDD 1600. Revaluation account debit to RDD 1600. Adjustment number 6. Livestock account debit to revaluation account 2600. Revaluation account credit by livestock 2600. Next entry, revaluation account debit to loose tools 18,040. Revaluation account debit to loose tools 18,040. Outstanding rent account debit 10,000. Revaluation credit 960. Bank credit 9,040. Revaluation account credit by outstanding rent 960. Revaluation account is closed. It is showing loss 16,080. It will be divided between old partners in their profit sharing ratio 2:1. Ramakant 10,720. Shamkant 5,360. This will be transferred to their respective current account on debit side. Ramakant's current account debit 10,720. Shamkant's current account debit 5,360 to revaluation account 16,080, being revaluation loss distributed among partners in old ratio. Leasehold property 20,000. There is no adjustment on leasehold property. It will be recorded on asset side as it is. Leasehold property 20,000. Next we have livestock. It is 6,600. It has been required to increase by 2,600. Livestock 6,600 added increase 2,600. It is 9,200. Loose tools 90,200. It is decreased by 20%. Loose tools 90,200 minus 18,040. Now it is 72,160. Stock 84,800. There is no adjustment on stock. Same value will be recorded in balance sheet. Stock 84,800. Debtors 48,000. New RDD 3,600. Debtors 48,000 less RDD 3,600. Net debtors are 44,400. Bank balance 75,400. Bank opening balance 75,400. If we record opening balance in bank account, to balance brought down 75,400. Current account of Shamkant 2,000. Partners current account debit, to balance brought down. Column of Shamkant 2,000. On liability side we have current account of Ramakant 2,800. It will be recorded on credit side. Partners current account credit by balance brought down 2,800. Relating to partners We have reserve fund 7,200. It will be transferred to the credit of their current account. Partners current account credit by reserve fund. Ramakant 4,800, Shamkant 2,400. Capital of Ramakant, Shamkant. This will be directly transferred to liabilities. Capital account of Ramakant 1,34,000. Capital account of Shamkant 1,20,000. Creditors 51,000. There is no adjustment on creditors. There is no increase or decrease in creditors. Same amount 51,000. Outstanding rent 10,000. This amount of outstanding rent is settled. So there is no any balance on rent account. Bank account credit side by outstanding rent paid 9,040. On 1st April 2012, Umakant was admitted for 1/4 share. He brings equipment of 80,000 as capital. Equipment brought by Umakant recorded on asset side, equipment 80,000. This is brought by him towards his capital. Umakant's capital will be now 80,000 on liability side. Firm's goodwill is valued at 1,44,000. Umakant agreed to bring his share, so he brought rupees 36,000. Bank account debit to goodwill 36,000. Goodwill account credit by bank account 36,000. Goodwill is divided among old partners in sacrifice ratio. Goodwill account debit side to Ramakant's current account 24,000, Shamkant's current account 12,000. Here goodwill account gets closed. Partners current account credit by goodwill. Ramakant 24,000, Shamkant 12,000. Rest other adjustments already we have recorded. We have closed revaluation account. Revaluation loss will be transferred to partners current account. Revaluation loss is 16,080. It will be divided among old partners in old ratio. Partners current account debit to revaluation account. Ramakant 10,720. Shamkant 5,360. Now we can close partners current account. We have closed partners current account. We are getting balancing figure on debit side. It will be transferred to liability side of balance sheet. Ramakant's current account 20,880. Shamkant's current account 7,040. On asset side, we have transferred balance of bank account 1,02,360. Now we can proceed to close balance sheet. We have closed balance sheet. Asset side total we are getting 4,12,920, which is equal to liability side total 4,12,920. That is balance sheet is tallying. In this question we learn how to give effect when partner brings capital in the form of asset and not cash. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.